What is up? Good morning, everybody. Happy Wednesday. Welcome to PreMarket Prep. Spencer Israel. I've got Joel here. I've got Dennis here. And man, it's just a follow through morning, right? Continuation from yesterday's sell off. I'm thinking that it's mostly just the bond market, right? Bond yields keep on rising, and that's what's doing us in here this morning. We'll talk about why the market went down yesterday and what that means for today. The big story of today's session is going to be the release of the FOMC minutes from the last meeting. Although the question is, did Lael Brainerd's comments from yesterday foreshadow the minutes from today, or do the two not jive? That's the question of the day. We'll break down this market. We'll talk about why we're trading down. We got the airlines to discuss as well. I want to talk about Rivian for a second because they have some lofty production goals for the year that they reaffirmed this morning. So we'll talk about that. We'll answer questions from the chat. And Joel Kulina, head of technology, telecom, and media trading at Wedbush, will join us at 8:35. So here we go. Do me a favor, smash that like button, and let's get started.
Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Mr. Joel, good morning.
Good morning, Spencer. Let's do a quick recap of the futures and get to some stocks here. S&Ps, we took out some major support last night, and I don't want to tell anybody where the next level is on my sheet for support because I don't want to scare anybody. We have crude up $1.26 at 103.22. The SPUs are down 45 at 75 and a quarter. Just a step down seller here going back there. Just foot on the pedal and just lower highs going all the way back on the 15-minute. Gold down 420, 19.2330. Silver down 28 cents, 24.26. Bitcoin, that's taking a hit too. That's down 12.95 at 44,900, and Ethereum futures are going the same way, a little bit more on a percentage basis. They're down $158 at 3312.50. So, Dennis, you had a couple days of inactivity, and the things heat up a little bit last night for you.
Not so much last night. It was actually pretty quiet, but it's heated up this morning. So yeah, we were actually trading up by 8 o'clock. It was really a nothing burger last night too. Hoping for more volatility tonight though, because it was a slow after-hour session here. But here we go. I mean, everybody wanted a pullback. They're like, I missed it. And we talked about this yesterday. So many people reaching out to me saying, "What are you doing? You have so much cash. I'm missing the boat." You got a pullback now. You got a 2-day pullback thanks to Brainerd here. If you want to get in stocks, if you are underinvested, I'd use the opportunity to probably start to get into some stocks. But again, don't rule out the possibilities that you just witnessed a pretty vicious bear market rally and that those lows could be retested. So again, nobody knows anything. If they tell you this is what's going to happen, stop listening to them because they don't know what's going to happen. I don't know what's going to happen. It's a very headline-driven market. We get, talks of a ceasefire, changes everything.
Yesterday, talk about the turn on a dime yesterday. Dennis, we talked about it.
It was all Brainerd.
It was, and I got smoked on it, and then boom, it just turned. It was so quick, such a quick turnaround, and it was something that it wasn't new information. And I think it kind of makes people on edge today, right? We had the Fed minutes, correct? And you got the Fed minutes yesterday. I mean, it's already out there. So sometimes stocks get hit. They come out with, they guide lower, they get hit. They come out, they actually are lower where they guided, and they get hit again. That's kind of the environment that I think we're in with the Fed here. And we have, what time are those minutes at? 2 o'clock today,
2
or
2 p.m. Yep, 2 p.m. Eastern time is when we'll get to minutes.
I mean, the consideration here and why, people can say, well, why now? Why the market sell off? Brainerd usually one of the more dovish Fed officials here.
Yes.
So that's concerning when you lose them too. I mean, everybody seems to be on the we need to attack inflation problem, which they do. And the market is just so like they talk, and I tweeted this yesterday, by real the market price is 6 to 9 months out. Give me a break. This is the most irrational market that I've ever seen. Driven, hedge said it best yesterday. And after the Brainerd comment, so like, what were the algos thinking that they weren't going to raise interest rates? I mean, it's just common sense right now that, hey, yeah, interest rates are going up. So just because market rallies doesn't mean interest rates are going up. So we have to look at the picture.
I'm seeing some comments in the chat that we're having some audio issues. I'm not hearing it on my end, so what I'm going to do is drop y'all a bunch of links to our stream on other platforms, but keep on going.
Let me just see if I'm hearing.
I got you. There is audio issues. Some StreamYard Direct, it's not for publisher. So the only thing I recommend, if you want, maybe check out the Twitter version. I'm going to check out to see if it was on Twitter.
Mitch, can you do me a solid and put the link for Twitter?
We'll do. I'll pin it.
How many people watch us on Twitter?
Not many.
Not many.
Not many.
I'd say like less than 100, but there's still some people that watch it there.
Yeah. Oh, here, I'm going to drop it in the chat.
Can we restart the show? Like, will that help? Or you think it's just...
I don't think it's the issue may be out of our control. So here, let me just do this right now. All right.
If it's because I could pop it on my channel too. To take a minute or two to set it up.
I don't.
One thing that we can do, Spencer, is if you want, back out right quick and come right back in. It should change the host internet, and then that might fix it. It'll switch to either Dennis. It'll switch to mine now.
They say it's good now. Somebody said it's good.
Okay.
If you're, I'm just going to check on my end.
If you're having problems, I see that comment right there. Click the link in the chat.
I think we're good.
Okay.
So for whatever reason, apologies, StreamYard. This was not our issue. You guys were hearing me fine. It wasn't a mic issue. It was literally StreamYard.
I don't know. That was bizarre.
They're usually pretty good though. So we'll give StreamYard a break. Obviously audio issues happen. We see it on CNBC pretty much every day. So I mean, we're pretty good. So anyways, yeah. So my rant was just, and I don't know, maybe they never heard nothing. I don't know if you guys heard anything here. I can start over from the beginning, but I was just saying in the beginning here, taking it back that we've got a significant sell-off here now. And if you were complaining 2 days ago about missing your chance to get in stocks, you're getting a chance here now. Think about maybe a 50% retracement on some of these. Like let's go to ARKK, which is the stocks that everybody wants to own. At least they wanted to own them Monday. So $52 was the low of the move. Take us up to $72, Joel. So that's a 20-point move. A 10-point retracement of that would be $62. So we literally can talk in 2 days about a 50% retracement of the ARKK move. So don't tell me they don't give you a second chance. Am I loading up on these? No, because there's a lot of other underneath the hood concerns here. So that's why I've challenged this rally the whole time. Bought a couple of stocks, and everything I bought was bad. So that's telling you that, it's not like this is a rah bull market. We buy stocks and make money. I bought AMD, got up 13 points in it. It turned around. They pulled the rug out in 3 days. I also bought a couple other stocks. I think I bought 3 stocks like during this course of this rally, 3 or 4 for the long-term portfolio. I think I'm down every single one. So it has not been like, oh yeah, buy stocks, we're back in this rah bull market. It's been, if you're chasing stocks, you're losing money. So, a bit of FOMO. I probably shouldn't have bought any stocks, but obviously I was sitting on 52% cash. I brought it down to 44%. It looks like to be a mistake at this time. So, but maybe if you're sitting on a lot of cash and you're looking for a pullback here, maybe use that 50% retrace. Maybe look at some of those growth names at, when ARK gets down to $62, if it gets down to $62. What are your thoughts here, Joel?
I think you're just in just kind of a wide open area here. So I don't think that, just looking at what we did at the beginning of March here, I mean, maybe on the individual issues, right? You can take a look at things, but to me, I mean, we were, I was trying to, keep, the kind of bullish hat on. We were holding 4,500. We were holding 4,500. I thought we were going to crack it on Friday. I thought we were going to crack it on Monday. I thought we were going to crack it on Tuesday. And then lo and behold, when everyone's sleeping, they do. They crack it. So for me, unless you get back over 4,500 now, I mean, this thing's wide open on the downside. I don't think this is the place to be, unless you got an individual issue that, a setup that you're liking, but just from a broad market perspective, I mean, that was you look at the air that you had on the way up, I think it could just as easily go back down there. So I don't think it's time to step in here yet. I didn't add on the, on the sell off. I didn't add, Dennis, you did it after the actual lows were made. You did, it was up from the lows. And so I
added 3 stocks off the lows and it was a mistake on all of them. AMD, I can't remember what else there, and I've still got them. AMD, but I'm reading them all. Like 3 growthy type names, and simply because, you got everybody preaching at you and saying, hey, this is, we missed it. I was like, I'm sitting with a lot of cash, it's potential that we have missed it. You don't know anything. So re-adding to stocks, but it looks like, those 3 stocks that I somewhat chased. I mean, AMD was $100 and I bought it on 113. It went to 125. But look how quickly they pull the rug out from under you. And if you want to see quickly pull the rug out, let's move away from this and look at the IYT. This is nothing short of incredible. Here you have, the IYT, which is obviously FedEx, UPS of transports. There's a lot of stuff in there. But look at the 3-day sell-off in the IYT. This is freaking vicious because this is not your growthy types. Like a lot of these names are lower PE multiples in here. And we just went from 275 on the IYT to 251.
Well,
in 3 trading sessions.
We should know that the IYT is pretty top heavy. It's like almost 40% Union Pacific and UPS, UNP and UPS.
And UPS. So let's talk both those stocks. I mean, here are 2 stocks that everybody was rah bullish. The rails, like Union Pacific, looking at that one, made a new all-time high. 4 trading sessions ago, 278. Boom. It just gave back 3 weeks of gains in 3 days to 250. Don't tell me this is a raging bull market. Don't tell me like that. There is a lot of damage under the hood. And if you go to your new 52-week lows, Citigroup, new 52-week low. Your home builders, new 52-week lows. KB Homes, Lennar, there's a few other ones in there too, but you can just see that there's not just buying across the board. There was buying in Apple, there was buying in the mega caps, but when you look and stop and look under the hood, there's a lot of damage here still happening. Not even damage that had occurred. There's still damage occurring. That UPS sell-off is something wicked. Like that's a conservative stock. That's a stock that doesn't move. It's 3.1% dividend. It's a lower moving stock. That's not even news. There was a downgrade in there, but that's not like they, cut guidance. Yeah. I mean, you just watched UPS fall 10, 12% in 4 trading sessions on one downgrade. There was one downgrade in there, which came like 2 days later. So, I mean, you got to be somewhat careful with just, saying, okay, yeah, we're going right back to the highs, because we've said this before. The market is ignoring, and it's been climbing the wall of worry, but it's ignoring everything. Yesterday, Brainerd just gave a fresh reminder that, hey, inflation is still here and interest rates are still going up. And the market's like, what are you talking about? Oh, I thought we were buying this. That's how stupid the market is. So use those opportunities if you're too heavy to lighten up. If you're too light on stocks, maybe you use the dips. Maybe still buying dips and selling rips is still working. It's been working all year, and I guess that still continues to work. But to predict this market out, what it's going to be doing after the Fed minutes today, who knows? It might be like, okay, well, there's a little more dovish than Brainerd was talking, and then it's going to rally and rip your face off. Or maybe it's going to be like, oh my gosh, they're really hawkish. I mean, we don't know. So just trade what's in front of you. But the main thing in this 2022 that I can say is don't chase moves. Don't just get the FOMO going, I got to get in. Because you know what? That's how you get in a trade like UPS. I got to buy it now. It's never going back to 200 again. And 3 days later, it's back at 200.
I think one thing you're looking at the UPS, I mean, besides their employees, I mean, what do you think one of their biggest expenses is?
Oh,
I mean,
it's fuel.
yeah.
I mean, that's a huge consideration here. Why? But why? Why does the rails ignore it for this long? Why all of a sudden are we concerned about this stuff? Like IYT almost made a new all-time high 5 sessions ago. Like not far from it. Like we're talking about like 2% off an all-time high. Why? Why did they ignore it all? And now why is all of a sudden they're saying, oh my goodness, oh, UPS uses fuel. Oh my goodness, the rails use fuel. Right. It does make sense, Joel, but is the market this stupid? I'm honestly asking that question. Is the market this stupid?
Right, because it's not as if anything really changed in the oil markets in the last couple of days.
I think you have so many uninformed participants in this market, like people who absolutely don't know what they're doing, including a lot of the big institutional money managers, that, even the analysts. I mean, let's give Wells Fargo, who is the analyst that just upgraded every tech stock in the world, went initiated buy 2 days ago on every single tech stock in the whole world. Shopify, it was 730, Square. There was a note, and it was like 25 stocks, and they initiated buys on all of them. They top ticked all those stocks. Shopify's down 50 points in 1 day after they made that rating to buy. I mean, the analysts don't know what they're doing either. So, you're taking advice from analysts, you're taking advice from your people on CNBC.
Yeah, it was there was actually two different notes, both from Wells Fargo. One of them was on retail, one of them was on tech, and they were both broadly speaking pretty bullish. Although the retail,
they're all bullish. This is one thing to consider when you listen to the analysts. Very few sell ratings out there. They don't put sell ratings on stocks very often. Mostly buys. It's their job to be bullish the markets. The markets are supposed to go up in the long term. But you know how quiet we were? Remember how quiet we were for like the first 2 months? No analyst ratings because we're going down. And the analysts are like, hold those notes, hold those notes. We get a little bit of stabilization. We start to get a rally. And then they all start coming up with their upgrades. And they just top ticked them all again. So don't take advice from just random people, even if they're analysts and you think they know what they're doing, because most of the time they're not going to do any better than you. These money managers probably aren't going to do any better than you either. The one thing you can just say in this environment is that 2022 has given you a chance to get back in your stock again and again and again. And you think you missed it. You think it's going back to all-time highs, and then they pull the rug out from under it. And again, I could have bought my AMD at 100 a couple of times. I chased it up and bought it at 112. So again, dead wrong. It's coming back. It's retesting 100, maybe today. I mean, it's 103. We're right there. You're 3-4 times down here. It looks like crap now. Like it looked good when it was trending higher, and you're like, okay, thinking that maybe this can get going. And now it completely looks different. So
it's your monthlies, It's
you almost got to look at the monthlies.
Yeah. Yep.
There was no real reason to come and be a hero on any of this stuff. I mean, even that bottom right corner, it looks like you're consolidating around this 100 and eventually going to crash it out. And here I'm completely talking against my book because I just bought the stock, but I'm ticked off at myself for it. So 22 years I've been trading. I still get FOMO too, and I'm like, maybe I did miss it. Maybe everybody on my Twitter feed is right. Maybe I do need to buy some stock. So I look up for something that didn't go, and I think it was like 111 or 112. And you know what? I was right for 3 days on AMD, and it went to 125. But the market just like boom, 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 and it's gone. It's like that, South Park, that South Park commercial, and we're going to invest your money, and it's gone.
Yeah.
I mean, that's what it feels like. That's what this market feels like. So again, day traders paradise, investors nightmare.
That's a good one.
I want to note that yesterday the Nasdaq was down more than 2%. At the rate we're going, by the end of this month, actually, frankly, maybe by the end of next week, we'll have more 2% drops in the Nasdaq this year than we've had in any year in the last 20 years at the rate we're going, because we've already had basically an average, and this is from Joel Kulina, who will be on the show in a few moments here. We've had 20 days this year where the Nasdaq 100 fell more than 2% in one day, which is basically 4 times as many days as last year. All of last year, it's only April, and the most since 2008. So, just choppy market.
But again, so we just went on a bearish rant here, but let's take in, put it in perspective here. We just had a significant sell-off in ARKK and a lot of stocks. So you're getting an opportunity if you really believe that, the interest rate situation, that inflation is going to get in check and the Fed's not going to have to raise rates maybe as aggressively as the market's predicting. And maybe the Ukraine situation, de-escalates, or even we get some type of ceasefire agreement. You're buying stocks today if you believe that, if that's your narrative. You should be buying stocks today if that's your narrative. It's not my narrative. That's why I'm still sitting with 44% cash. But, will I look and bring it down to 40% cash at a certain point in time? Maybe. Maybe I'll find some, something that I want to buy. I mean, some of these stocks, even like Karen Feinerman was making a good argument to buy UPS. I mean, here's a stock that doesn't historically move 25 points in 4 trading sessions. Maybe, it's an opportunity, but then you look at the longer term chart, like Joel says, and you think, well, I don't know. This is a $100 stock 2 years ago. It's a $195 stock 2 years ago. It doesn't look that cheap, from relative to where it was. Yeah, you can look ahead and say the PE isn't, really high, but they never are on these stocks. So tricky market, tricky investors market.
I mean, once again, how many stocks look like this? You've had the big run up. The monthly, you can give it down to 192. What was the low here? The low in January, 192.74. But, after that, what are you looking at? You're looking at 180. When I look at a lot of these charts and I see this, this kind of momentum through here, just such an unusual moves. And unfortunately, when, you go quickly up through an area, you also can come down a lot quicker. I think we're taught, the inflation thing is definitely, bearing on us. But, one thing that, we don't have an answer to, and we're probably not going to have an answer to for a long time, is the situation in Ukraine. And we got that pop. What was it? A few days ago when they said that they were retreating, and none of that. It's actually gotten worse. So market does not like uncertainty, and with the uncertainty with the inflation and with Ukraine, I don't know. I don't look at this as like I don't know. You're talking about buy the dip, and like I said, individual issues. But when I look at where the market is at, where it just came from recently, I think the dip is, I think it's too early to start nibbling here.
Have you raised cash? Like, where are you on your cash? Like, me and Joel always have some cash.
Too much. I've always had too much.
I'm never 100% invested.
Right.
So what do you think you are? Spencer, what are you? You 100? We'll go to Spencer.
No, not 100. No. I see. The thing is that I always stay probably 60 to 65. Always. So not participating as much on the way up and not getting as much on the way down. So
and we're conservative stuff too. A lot of me and Joel are dividend payers. I'm not in the super high growthy stuff. And the reason for that is, I've had my butt kicked a few times.
Yeah.
I had my butt absolutely handed to me during the financial crisis. Not from a trading perspective, but from an investing perspective. I can remember I was killing it trading on my day trading. I was like, I'm still losing money today because my long-term investment portfolio is going down more than my day trading account is going up. So I'm like, I can't, win on any of these days. And it was the same thing during the tech bubble burst. I learned the hard way in the tech bubble burst. I was a young buck. And, I remember buying, making some money trading and then throwing it in some ETFs and stuff and just watching it, get slaughtered. And I had a bunch of Qs. And my original Qs purchase, I can remember I bought, if we want to take it really far back, I bought the Qs in 2000 at $110. and they went down. I don't know, you can't go back that far on your chart, Joel, but I mean, after the 110 purchase, I think the Qs went down like $38. I'm not joking. And, you know, and I end up buying some more down there, and my average cost basis now on the Qs is like 60 or 65. But my original QQQ purchase was like $110. And I watched the Qs fall like 70% after I bought them. But, I mean, that's not a bad stock pick. That's a bad market. That's the Qs. So, you know, stuff like that can happen. I don't see that happening now because valuations aren't as ridiculous as they, you know, were back then. But don't, you know, think that, you know, you can't have more of a pullback than 10%. That can occur.
So the question is, where do you look, right? Because the strength is in right now, it's in utilities, it's in healthcare, pharmaceuticals, it's in consumer staples. Those have all held up relatively well this whole year, but especially in the past couple of days too, right? So that's where the strength is. Do you look there? Do you buy dips there? Obviously, you don't want to be buying dips in stocks making new 52-week lows like Citigroup and
not typically,
and then the home builders. But do you look at the relative safety of consumer staples and utilities right now?
No, because those things are all way overbought. So I think if you're looking there, you were in the dead wrong spot.
Okay.
I think there's a bubble in utilities and consumer staples because this market has been scared for so long. I mean, XLU is at all-time highs. So as a trader, okay, we need to separate it. As a trader, maybe, you know, maybe you're still buying these things because they continue to work, they continue to go up. It's seemingly like every day. But as a long-term investor, you're saying, I need defense. I mean, you're buying Coke now at $62. You're buying your consumer staples now. I mean, I don't know, even Procter & Gamble. I would be selling Procter & Gamble. I said I would sell at 162. It went to 142 after I said that. It's back at 154. A second chance city here to get out of some of this stuff. They're getting squeezed on some of these margins. You know, they got input costs happening there too. You know, I still said Procter & Gamble was going to get Cloroxed. And, you know, it almost started to do that, but then everybody starts playing defense again. The institutional money managers, the lemmings that they are, for the most part, you know, just, you know, I need to stay invested. So what do? They start, you know, swapping over into other sectors because it's their mandate. And maybe it's not their fault. If they got to stay in the market, they got to stay in the market. They go move to the sidelines. The utilities is moving to the sidelines. I think it's a crowded trade. I think it's a crowded safety trade. And the reason I don't like it is you're in a rising interest rate environment buying dividend yielding stuff. I mean, the XLU's dividend is 2.67%. It's not even a good dividend. And you're hiding there. One, you're going to lose to inflation in the long run in that investment. And two is it's a crowded hiding trade. So if you're nervous about the market, you go to cash. You don't hide in utilities, don't hide in staples. Because if they really start to get ugly, they'll hit everything. Don't kid yourself. Those stocks will get hit if it really starts to get ugly. And if it doesn't get ugly and it's going up, you want to be in the other stocks because those are going to go up a lot faster. So I see no case to be long the utilities or the consumer staples at these prices.
Quick question. Philip Morris is holding up pretty well. But
all of them, Joel.
Yeah.
There's a bubble in all these things. It's the institutional money manager safety trade.
I think bubble might be a strong word. Are they overbought? Perhaps.
Well, it's crowded. Okay, we'll use the word crowded. This is a crowded safety trade.
Okay.
I think there's a lose-lose. And if interest rates really are going up, I'd rather own cash. You can get, you know, 2.5% right now in risk-free investments. You can. So, I mean, you're here looking at you know, an Altria 6.84%. Maybe it's a better one because the dividend is super high on that. But, I mean, you're in Coke for 2.8%. Is Coke really got the growth story going on? Is this like everybody's going and drinking more Cokes? You know, Warren Buffett is getting older here. We can't keep counting on him to drink 6 Cokes a day. So, I just think you can't hide in consumer staples if you're hiding. If you're hiding, you hide in cash. If you're not hiding, get invested then. Buy some of the stuff. Buy some beaten down names. I think there is some opportunities in some of these beaten down growth names. Some of the valuations aren't ridiculous anymore. You know, maybe look at Facebook. I have a little piece in there. I'm not saying, but again, this is not the time. I mean, 231, we just rallied from 185 to 231. Gets back down to 200. Maybe it gets interesting. Maybe you look at a PayPal. PayPal's going to get here again today. Maybe it pulls back to $100. Maybe you start looking at something like that. Maybe you look at your Square again. If it pulls back to like 120 or, you know, 50% retracement, think 50% retracements of the recent moves. Or just go into your ARKK. 50% retracement of the recent move would bring us to 62. That's in play today. At 64, there's a possibility it could do a 50% retracement today. We don't know, but it's a possibility. My chop now sound card's getting us again. Sorry, StreamYard.
Yeah. Do you guys want to go to the airlines for a second here before we bring Joel on and just talk about that chaos?
Yeah, for sure.
Because sound is back now. I don't know what's going on today, guys. Sorry, it's a platform issue, sort of out of our control here. Okay, so we had this Spirit Frontier merger on the table, and now yesterday the New York Times comes out with a report that is confirmed by the company that JetBlue approached Spirit Airlines with a takeover offer of $3.6 billion. It comes out to $33 a share. And so Spirit, JetBlue, Frontier, many implications here.
Wow. Bailout central if you're long bag holders on, from Spirit Air forever here. Like, obviously not if you're long before COVID started, but I mean, if you bought this anywhere in the last year, you were down money basically yesterday, and all of a sudden, boom, you're basically back to scratch or even up. So not surprising, it stops at 28. The cash offers 33. Could that potentially happen? It could. So there's a possibility this thing could go higher here. So it's going to have some antitrust concerns here, though. I'll tell you that much. Like, you got an administration that wants to crack down on. It's said already. This administration is going to start looking at some of this M&A action and crack it down on. I mean, 2 airlines, big ones like that going to Frontier's obviously already there, but JetBlue safe. I think they get antitrust scrutiny.
Yeah, I mean, a lot of times if there's smoke, there's fire. We talked about that yesterday, that 28. I mean, I'm still just going to look at it technically. And, this 28 was your high for a couple months ago. So 28.30, you got close there yesterday. It's traded down $1.07 with a $33 offer on the table. I don't know. I mean, the street right there is giving your opinion on this one. And we talked, I think this broke during the at the close show, and man, you can't be happy if you're a JetBlue shareholder. I mean, the airline industry is it's so tough. It hasn't been in great shape in a long time. I think we're just going smaller planes and smaller trips and stuff. That's why I've not been bullish. Boeing, just a lot of concerns. Look at Boeing in a trading range, breaking out of the bottom of the trading range. So I think that was a gift on that one. And the street is showing its skepticism right now, keeping it $7 away from there.
All right, I want to get our guest thoughts on this entire conversation. Joel Kulina is head of technology, media, and telecom trading at Wedbush Securities. Joins us periodically on this show, and I'm sure he has thoughts on everything we just talked about. So let's get Joel on the show right now. And Joel, good morning.
Hey, good morning, guys.
What are you thinking about that conversation that we've been having here? Just about. Yep. I mean, we kind of went through a lot of it here. Let me start with this. If you had to put cash to work, where would you put it right now?
Yeah, I mean, I'm looking at a stream here, and Mitch is saying utilities seems like the safety trade, and within tech, the defensive names are the names that everyone knows, the household names, mega caps, whether it's Apple, Microsoft, and Google. I think those 3 names are head and shoulders above every other tech company. They just because for 3 simple reasons. They possess the combination of strong growth, massive balance sheets, defensible moats around their business. And then on top of it, they also have enormous scale and elevated margins. So I think if you had to put money in the market, I think you don't want to be too cute. And you have to stay somewhat defensive and be ready to kind of also keep relatively tighter stop losses, which has really been the theme since the Fed shifted its message in late November, early December.
Do you think that the comments from Brainerd yesterday are essentially a direct forecast of what we will see today from the FOMC minutes? Was that just a precursor to today?
I think so, and you guys touched on it. She's historically known as one of the more dovish members of the group as well. So she didn't hold anything back. I mean, and she clearly laid it all out. And to hear that obviously lower income households are getting disproportionately impacted more than higher income households, and there's real inflationary problems. And covering tech as long as I have, when you hear a company like Taiwan Semi last week. Really warning about demand for consumer electronics falling off a cliff, whether it's smartphones, TVs, PCs. You can't discount that. That's a big deal. Look at the recent numbers out of China as well. So JD.com, 3 or 4 weeks ago, Alibaba, Tencent. Chinese consumers collapsing. Is that going to happen? Slowly creep into Europe, in the U.S. It's slowly starting to feel that way. It's not that outrageous. Like again, inflation's at 40-year highs, and we do know that consumer spending behaviors because of COVID were just really all out of whack because of the once in the century, a pandemic. People were getting either the stimulus checks, they weren't traveling, they weren't spending their money on just discretionary things, going out for dinner, and people were buying all these electronic devices. And it feels like now that we're about 2 years, past peak COVID fear. That's really just kind of when we started. It feels like we could be, things could be heading downward into some sort of spiral. Not trying to raise the red flags or alarm bells too violently, but it's a pretty harsh environment, if you ask me.
Is there any area of tech that you think is oversold right now, Joel?
I don't know. I don't think you can say anything's deeply oversold anymore. I think obviously we've had a huge, dead cat bounce, or whatever you want, kind of deeply oversold rally in the back half of March. We saw the peak of that ended kind of on Monday. I don't think things are too deeply oversold. I think the stocks that are still 70+% off their highs, those aren't going to come back. And most of those obviously fall into the kind of SPAC category. I would not be chasing any of these business models, to say the least. I just don't see that upside. Those multiples are never going to be seen again. I mean, if you look back at like Cisco, a stock like Cisco, which peaked at $80, I think in mid 80s back in 2000, I think it only it's still yet to see those prices again or that multiple ever again. So multiples are never going to go back to kind of what we saw just a short while ago. And then obviously we're heading down a path where the Fed is clearly, stating their message that they need to control inflation for Main Street, and their policy is going to be geared towards Main Street versus Wall Street. And I think under the Trump administration we didn't really get that type of message. But again, I think the lingering effects of COVID has created just an unprecedented scenario as well.
Do you think we go into a recession because everybody, doesn't want to say it? We want to hear a soft landing. We want to hear that this is going to be, the Fed's going to be able to navigate this. But what are your thoughts? Do you think recession's on the table?
I mean, I think it's on the table, and I got to raise my hand. I'm definitely not a macro expert. I'm not as well read in terms of a historical point of view as well, so I don't want to mislead anyone. But again, you hear what Brainerd said yesterday, and I thought her message was very clear that large pockets of the American people are going to be disproportionately suffering because of this. Obviously, the labor market, is holding up to a degree, but again, it's just like all these bubbles that are created, whether there's signs of unraveling, and how that ripples down, time will tell. I think it's tough to call a full out recession because of the COVID, coming out of COVID, you're going to see pockets of the market doing well. Probably travel reopening remains I still think a good place to be in the market. Unless again the job market and economy really falls apart. But I think there's still demand for people to do things and get out there and travel. Probably a lot more localized trips than abroad. I know you guys touched on airlines earlier, so I think the domestic kind of reopening plays are probably still a good, relatively safe place to be in the market. But yeah, in terms of a full-blown recession coming, we shall see. All I know is that last earnings season, it was probably one of the worst overall that I can remember in a long, long time. Mega cap land was Facebook and PayPal led the blow-ups, and we're still seeing the names that benefited from those pandemic tailwinds. All those catalysts have now become major headwinds, and I don't see any sort of signs of stabilization. But you want to stick with the names that kind of weathered it, and again, that's Apple, kind of Microsoft, Alphabet, cybersecurity names as well under the hood. just don't overthink things, and again, just kind of be nimble.
And Netflix too, Joel, never even close to recovering. Speaking of earnings season, so that starts in a couple weeks here. What are you watching? I was talking to somebody yesterday is focusing on margins, margin compression. Who has control over their margins? What are you watching? What numbers do you want to see? What specific areas of the balance sheet or whatever are you focused on for the next couple weeks?
Yeah, I think margins are critical, because I think up until really recently, a lot of the tech companies as well, where they were feeling margin pressures from supply chain hiccups, they were able to kind of pass those price increases along. Especially in the semiconductor space. Well, now we're not seeing the price hikes that we got used to. Memory prices are now heading down again. The recovery hasn't been as robust as the bulls had hoped. So margins are very key. And again, I think especially within the software cloud SaaS names, Roku, I know it's not obviously it's more of just throw it into the pandemic bucket. What they told us. I mean, they told us 3 months ago that they over-earned in 2021 simply because of accelerated demand, the ability to cut their spending and cost immediately when the pandemic hit, and then multiples surged. So obviously everyone benefited. So I think you want to hear which management teams come out and obviously are genuinely kind of honest about the macro backdrop and kind of how it's impacting their business. I mean, obviously within tech, the most pain, it feels like it's going to be seen and felt in the private side of things. We obviously saw Instacart, they took their valuation down 40%. You're hearing other horror stories along those lines as well. A company called Fast, I think they just announced they're closing their doors yesterday. Not that long ago, they did $125 million raise at a billion valuation, despite burning through, $10 million a month in cash. So that's kind of the problem. It's we know all these kind of these tech high flying companies, they've been able to just, liquidity has been there, and there's been a never ending supply of money, and that's clearly drying up. And that's going to be something very interesting to see. And especially going back to earnings, on the software side, any company pretty much that announced some sort of M&A got absolutely punished. Again, that plays into, are these cloud, once high flying cloud SaaS names that were just, high flying growth names, they were kind of using M&A to maybe mask decelerating growth. So I got a feeling M&A, things along the elevated spending, those type of stories going to get pounded again.
Yeah.
We're on the line with Joel Kulina, head of technology media trading at Wedbush Securities. Joel, you have your ear to the street, right? And talking to a lot of individual, institutional investors right now. Had a surprise rally under after the expiration under unusual circumstances. It looks like we hit a little temporary to interim high here. And now we're pulling back, and I look at a lot of these charts and everything. It's like buying the dip. Where are they? It seems to be there was a lot of selling on strength going on last week. Now a little bit of selling on weakness. I'm looking at the area that we're in, just in the S&Ps in general, and also some individual issues. I just looking at today, sure you can get some intermediate pops, but what's the institutional money doing? That let's say they missed the rally, sold a little bit more on the way up. Where's there's interest going to lie?
Well, I think you kind of part of your comments there. I think a lot of people on the institutional side had been surprised by the resilience and the strength of the retail buying power. I mean, obviously, retail's continues to buy the dip, and then kind of we've been seeing the lower quality type of names that have kind of been leading, over the past kind of several weeks. I think I think GameStop was up something like 48% over February and March. AMC was up over 50%. We saw pockets where Tesla went on this incredible run. Nvidia had a huge run as well. So retail strength has been incredible. That's been, an institution. These guys I talked to, been very surprised by that. But I think, one consistent theme of 2022 from an institutional point of view is liquidity remains terrible. So that speaks to there is a lot of sideline watching, and guys are still kind of playing in more defensive mode in terms of more focused on managing their existing positions, which aren't really going that well, versus looking for new ideas. And that unfortunately remains a theme within tech. especially. Guys who are growth Momo guys over the past 5 years, then all of a sudden going to flip their switch and say, you know what, we got to be long, Cisco or Oracle or Hewlett Packard. They're still sticking with these names and they're fighting them, to the end. But I think activity's definitely been depressed. So I think that's what we're going to see in the next couple of weeks, really low volumes, and kind of, which will just amplify some of the volatility, which again, just people need to be aware of that, because if stocks are moving 5-6%, it could just be one player out there bullying it around. It's not because there's actually something bigger going on.
Joel, since you mentioned it, you still bullish cybersecurity?
Yeah, I mean, I think it's a very, very defensive kind of group. I was actually, funny enough, looking at a name like Checkpoint, CHKP, coming into 2022, extremely underweight name, heavily shorted from the hedge fund community. The stock's pretty much within striking distance of all-time highs. And they obviously just continue to benefit from enterprises and government ramping up their security spend and focus. Palo Alto is a name that I'm sure all your viewers are fully aware of, large cap. So it obviously has much more defensive kind of background to it as well. Leader in next-gen security. I still think CIOs, security breaches is the one thing that keeps them up at night. And look what Okta's share price did not too long ago when lo and behold, a security company, fell victim to a hacking attack themselves. And I actually, through that fallout, I see a name like SailPoint on the identity side as a beneficiary of the whole Okta debacle.
I just saw this note from Bank of America this morning, sort of driving with what you said earlier about flight to safety in the mega cap tech stocks. Bank of America noting that ownership of Apple among fund managers increased 7% month over month. They gotta stay invested somehow, and the safest place to do it is in mega cap tech. Joel Kulina is head of technology and media trading at Wedbush Securities. Joel, always a pleasure, sir. Have a good rest of your day.
And guys, one last thing to make sure. I don't know what NVIDIA is doing right now. I just want to make sure you see that Cleveland was out with a negative report on NVIDIA this morning. And what they were talking about is softness in the PC and gaming side and mixed signals in data center. Really the first time I think I've seen someone get a little bit more concerned on the data center side. But again, that speaks into demand on the consumer front is kind of starting to fade a little bit. So NVIDIA is one definitely keep on the radar today.
Thanks for that. Have a good one, Joel.
All right, guys, take care.
All righty.
Thanks, Joel.
I hadn't seen that NVIDIA note. I mean, the whole market's down, so what,
individual news on a day like this just doesn't matter. There's buy ratings, there's upgrades. The upgrades are down. I mean, I'm looking at the board and going across. Rivian is up. We did have some sales.
Yeah, the Rivian thing, can we talk about that for a second? This is so interesting. So Rivian said that last quarter they delivered a little over 1,200 cars in 3 months, right? And they also said that they're still on track to meet their goal of delivering 25,000 cars this year. So they delivered 1,200 cars in the first 3 months of the year. And they're saying, don't worry, we're going to deliver 23,000 more than that, 23,000 cars in the final 9 months of the year, from 1,200 to 25,000 in 9 months. It's going to happen, Rivian says.
Well, maybe it does, but even at that,
that's
you just got to stop and analyze. I mean,
that's a lot.
The stupidity in this market, and I'm going to keep saying it's pure stupidity. $120 a share. This thing was trading up there forever, and we we kept saying, I don't get it. I don't get it. I'm not buying it because it just doesn't make any sense. I mean, the market cap of this freaking company was worth more than General Motors. I mean, they don't make cars. Like they hadn't even started making cars at this point. It was pre-revenue. The hype, the same thing with the DWAC to Twitter comparison yesterday. But I mean, what was the market cap of Rivian at the very high? How much? Let's go look. What's the market cap today? The market cap today is still ridiculous. There's an argument that this could be $5, on if you were really doing it from a valuation perspective. But, they got the growth, they got the story. So we're not just going to get crazy here. But I mean, you think
growth? 25,000 cars is growth. I mean,
well, from 0 to 25,000, it's super growth, Joel. It's infinite growth.
Right, the Rivian,
it's still worth $41
million. The Rivian market cap at its all-time high was $153 billion.
It was worth $153 billion at its high. What are people on? Are people this stupid? They are. That's just I'm so frustrated with this market because it's so dumb. I mean, $150 billion. You know, what do you think? They're taking over the automotive industry, and that's all there's going to be? General Motors worth 62, so it wasn't even worth more than General Motors. It was worth 3 times as much as General Motors at the highs.
Just inject the lithium straight and the graphite straight into my veins. All right.
That's what they were in. And you've got to understand, as a long-term investor, you've got to do fundamental research. As a trader, you can trade anything. You want to be in Rivian, it's going from 100 to 120, you're making money. Great. But don't get stuck holding the bag when valuation starts to matter. And valuation matters today. And it's still worth $41 billion right now. And they make 1,200 cars.
Yeah.
Nothing to say on any of this.
Okay, to be fair, the market cap today is $38 billion. So
$38 billion. That's almost more than Ford.
We've gone from 153 to 38 in 6 months.
Yeah. So you say, oh, it's cheap. Should it be 38 billion? Should it be 3 billion?
Yeah, I don't know.
Dennis, like the chat is saying, would you buy it for a penny?
Yeah, you would.
I might not.
I would.
Anyways, whatever. It just came off. It's over 56 to 42. I don't want people coming in. Oh, Dennis is so bearish. This thing, it's going down. And the time to sell was 4 days ago. It's 56 to 42. Now you need almost a pop to get out of this thing. But is there a bull case here to bring it back to $80 or $100? They got to start making a lot more cars.
Yeah, no, the bull case has nothing to do with Rivian and everything to do with the overall market, right? Like if the whole market turns, Rivian's going blast off.
Well, maybe, but sometimes the market turns. So let's just do scenario analysis. And we saw the market turn in 2002. And we saw it go up for 6 straight years. But so many of those stocks kept going down because they still didn't make sense at those prices. And to Joel's point, Kulina's point, with Cisco, and we've talked about this before too, $85. And, it was trading 130 times earnings or something up there. And here we are 22 years later, and it still can't get back to those highs, and it's trading like 12 or 13 times earnings. It took that long. So here's a company that did everything right, grew revenue exponentially over the last 22 years, but because you paid so much for it back in 2000, you never got your money back. Great company, but you've got to look at how much you're paying for those great companies. It matters, man.
Yes, it does matter, but my point about Rivian going blast off, it was more really tied to the fact that we're in it's just a different environment and social media and meme stocks, and it wouldn't shock me for a second if the market turns right and we go back to all-time highs. I think it takes a lot of the
for sure.
But it's a different dynamic, and I've said this before. It's a whole different. Everyone was a winner when this thing was going up, right? Now everyone's a loser on the way up, and they're trying to get on with it. Then you have the intermediate traders, which you had to move from 33 to 56. You're already giving halfway back. I mean, the people that scooped it up and under 40 and all the way down to the low, they're just scaling out. They have absolutely no regard for this thing going back to 50, 100, 150. I mean, there's just too much. The dynamic has changed. The structure, the internals. Yeah.
Who made the money on this one? The investment bankers. That's who made the money on this one.
That's true.
They make it on all. So.
All right, I know.
Dennis, you're down on investment bankers. You're down on investment analysts. You're on the institute. What did you call it?
Pretty much down on Wall Street.
What did you call the institution?
and the participants as well, because I called them all dumb.
Wow, man. Who's that Sesame Street character? Groucho or something?
Oscar the Grouch?
Yeah. Oscar. Yeah, Oscar the Grouch.
I'm always kind of grouchy.
Yes.
I'm always a little bit
I love
grouchy.
it, though. I love it.
I'm just saying what I think. Yeah. That's it. I mean, and that's why some people like me. A lot of people don't like me because I speak what I think. So, whatever.
I know there were a few tickers in the chat that I missed them, though. So a few people had asked for us to talk about them, and I had seen them, but I didn't write them down. So if you drop a ticker in the chat, please do it again, because I did not write down whatever it was. I saw like a handful of them. AP says Tilray is skyrocketing. I know they had earnings this morning. Yeah, wow, it is. I hadn't looked at that in like an hour.
So
I know it was
my opinion, just my
I know
opinion.
it was a slight beat for Tilray, but I didn't realize it was up this much this morning. Yeah.
What's the chart? How high did we get, Joel?
We're at the highs of the session right now, 780, just almost to 790 here. You cleared 750, so that's the good thing. I mean, what are you going to do in the 8 handle here? That's what I'd be interested in. Let's call it 8.25, 823 and 832. There's a couple daily highs for you to keep an eye on. And then after that, really opens up to the $9 area. But we'll see. They're still pressing. They're pressing. We'll see if.
They think eventually they get back to $300 a share.
Yeah, well, to go out at $299.
Never gonna happen.
Never say never, Spencer. Never say never. They're buying at 7 and saying, I'm going to cash out when it's 300 and I'm going to retire, and this is how it's
never going to happen. Somebody will buy, some other company will buy Tilray before that happens.
Yeah, that actually sucks when you bought at 300 and you get bought out for 10. That actually
never happen. Someone asked him what we think of Lucid. Just take a guess. Seahawks what Dennis and Joel think of Lucid.
Rewind the Rivian conversation.
Yes.
Next.
All right. Well, I haven't looked at Twitter this morning. How's it doing? It's quiet. It's not interesting.
Again, okay. Now you're hitting my style here. We got Musk involved. We got a nice pullback here on Twitter happening here from yesterday. I mean, is there a gap to fill below? Yeah. Is it getting back to 40 anytime soon? Not with Musk involved.
What about the edit button, Dennis?
What
about the edit button?
I'd be more inclined to buy a pullback on Twitter than I would on a lot of other stuff. But again, I don't know. It's hard when it was 40.
I was out there at 55 yesterday.
I like that Musk is involved. I'm a big fan of Musk. I like that he's involved. I don't think it's a good thing for Tesla either. Like everybody, is saying, oh, he's got all kinds of time. But if he's going to start getting more involved with Twitter, and maybe this is just something he's just doing for fun short term too. So we don't even know. It's hard to know his intentions.
I mean, he literally bought Twitter shares every single day from January 31st through the end of March.
Wow.
Or I guess through Friday. So April 1st. So he bought the stock every day for 2 months.
Is this good for Tesla? I mean, he's so busy. That guy doesn't sleep. He must be the busiest person in the whole world.
He wasn't buying Twitter. His guy was buying Twitter.
No, I'm just saying, but he's going to be involved now running Twitter. He's in SpaceX. He's in Tesla.
I don't think
this guy does more than anyone else in the whole world.
Yeah, he's 6 hours a night.
He's unbelievable. I'm a huge Elon Musk fan. I've never been a huge fan of the Tesla stock as a valuation. I never understood, but I'm a huge Elon Musk fan. And, you think if SpaceX was public, it would have got investors. Now, all of a sudden, Elon Musk is involved in Twitter.
I don't know.
I think I'd be a buyer of the Twitter pullback. Maybe not necessarily today, but at a certain point in time, if we start to really get ugly in the market, they start just hammering everything down. Twitter gets back to 45. Let's not even go 45. What was the low of the move down? Let's go to 46.86. What do you think, Joe? You get to 47?
No,
you'll load up. You're already in it.
No. I'm just on the opposite end of the coin here on this one.
You want to sell?
I was out there with the remaining piece at 55 yesterday, and I didn't get it, and now I don't know. I mean, is this the Elon Musk effect? I mean, this much is this ad? Are they? They're still the same platform. They still haven't been able to monetize things yet. I'd be interested at 40. I wouldn't touch it. I mean, if you want to try it here, but once it starts
40, I don't think.
You don't think?
I don't think so, no. I wish you could get 40.
We haven't done a lunch bet in a while. How about 60 versus 40?
No. How's that fair? It's 49.75 and sell air below.
39.75.
No lunch bet here. No lunch bet.
Well, he won't even give up a 20-cent edge.
No lunch bet.
I know.
But
also just rally, I mean, because he's not going to buy more here. So if you're waiting, and then here's the interesting thing too. Like it came out, is he passive versus, boom. Yeah. So he does it, and then the next day he goes on the board, and then today they announce that he's actually an active investor, and it's going down. I don't know. I think this is a bailout, I think, for shareholders on this one. And until now, you're $4 or $5 off the high. So I don't know. Just my opinion.
Tough stock to call. It's wild. It's going to be wild. I'd be more inclined to buy a
It's a
pullback
gift.
in this than I would in Rivian.
Okay. All right. You got me there, Dennis. If I had
like
to buy
Twitter better than
1,000
Rivian.
shares of something, it would
What do
be
they say on CNBC? Fastman, would you rather? I would rather Twitter than Rivian. We stole their game.
A few people asking about banks here. I would just say watch.
Oh, the banks are. Oh, it's 9 a.m. I'm gonna let
time
you guys. The
TLC.
banks are looking horrible, but I'm gonna hop and I'll catch up with you guys later on.
Interest rates going up, and the banks cannot go up. That is so interesting in itself. Would I buy a pullback in some banks? I don't have a lot of bank exposure. Maybe.
Me neither.
Maybe you could talk me into them, but holy macros, the relative strength, absolutely terrible. And I think the banks are foreshadowing something more foreboding, which is that ugly R word. The banks will not do well in a recession. They'll do well in a rising interest rate environment, but they will not do well in a recession. If the Fed can navigate a soft landing, the banks are going to do well. If they can't, then everybody who's piling in banks because interest rates are going to go up or soar are going to be disappointed. So
as if I needed more reason to be afraid of the banks, on the plane on Friday, I started reading The Big Short. Finally,
great book.
It's been sitting on my shelf for like 3 years, and now I'm halfway done, and I'm even more afraid of the banks. So.
Well, we're not in 2007 anymore, where they're loaning money to
I know.
They're giving $700,000 mortgages to tomato pickers that make $7 an hour.
Lending standards are not quite that.
Literally, they were lending money to people that couldn't make the first payment.
Yes, I know. And it wasn't that. Yeah,
it was ridiculous. Whatever. Wall Street right there in a nutshell. Whatever. So bad.
Anyway, all right. That'll be a wrap for us today. Let's head on over to live trading where they're making day trades live on the show. Ryan, Mitch, Zunaid. Hey, before I go, some housekeeping items. First things first. Smash the like button and say, hey, subscribe if you haven't subscribed to our YouTube channel. Just subscribe. It doesn't cost anything, and just hit the subscribe button, and it helps us out in the eyes of YouTube. We do appreciate that. Also, if you want to become a YouTube member, there's that little join button on our YouTube homepage there. Get access to custom emojis and badges and more down the line.
As well.
What?
Excellent. Yeah, I never joined it.
You can join.
Yeah, everybody can join.
You can join.
I never even noticed a join button there.
Yeah, join. It says join right there. Martin Contreras asking, where's the bot? Chatbot is in timeout for now. We're trying to figure out how to make it work.
The chatbot that put everybody. If you used an emoji, you're in timeout. It was a mean bot.
Trying to figure out how to make chatbot not so.
It was a mean bot.
Yeah, trying to make it not so ban happy. But it's a work in progress. What else did I want to say? Shoot. Like, subscribe. Hey, check out our upcoming events, guys. The Cannabis Capital Conference is in April. The FinTwit Conference is in May. Links and discount codes for tickets to both of them are in the description of this video. Check it out. Come hang out with us. Come hang out with Mike Tyson and do all that fun stuff.
Iron Mike. I'm telling you, I want to eat those gummy ears.
Yeah, eat the gummy ears with Mike. You can do it. So Genius. Thanks to our guest today, Joel Kulina. Thanks to all of you in our chat for bearing with us with the some audio glitches early on in the hour. We appreciate that. I'm going to end the stream now. Redirect you over to live trading. Ryan, Mitch, Zunaid, thank you for watching. And please remember that all the information from our show is meant to be used as informational purposes and not for investing or trading advice. Thank you very much for watching. Good luck at the open.